Welcome to this podcast on mortgages. Today we are with Kevin Davies. Hi, Kevin.
Hello. Nice to be here.
And we're going to be talking about mortgages. So, resident, non-resident, how can you get it, the approval process. So, watch the videos. There will be different times stamps in the video where you can go directly to the point that interests you. And don't forget to follow, like, and subscribe.
So, my name's Kevin Davies. I've been in Dubai now for, say, 3.5 years doing mortgages. Previous to this, I was doing it in the UK since 2008. So I've kind of seen it before regulation, through regulation, after regulation, and now I'm in Dubai. Access to all of the banks here, and give me your questions. I've probably heard them before, or certainly be able to answer them.
Sounds great. Let's get started. You have some actual cases where you have clients who bought the mortgage and then they made like good capital. What's the maximum capital appreciation you've seen?
It was actually a goalkeeper bought on the Atlantis Royal. Mm-hmm. He never even viewed the property. He did it all remotely. He paid 12 million for it.
Wow.
And on kind of a handover resale, and the valuation that he got kind of 8 months later was 24. And that's doubled his money. I was shocked. He was shocked. Yeah. I actually asked him for paperwork, the sales purchase agreement. He said he didn't have it, and I said, you must have it because you must have signed it. And he said, no, I've never been in Dubai and signed anything.
Really?
It was his first time in Dubai signing over this apartment, and he doubled his money without ever even stepping foot in Dubai.
That's actually a really good success story. I think the Palm, any community close to the sea or anything like this, you can watch my video on the golden rules of capital appreciation. You will see.
There's more. They're running out of coastline, so they're creating their own.
Exactly. I think to go back to mortgages, there's a lot of people, of newcomers who come to the market. With the developers, especially with a developer like Shoba, we offer a 60-40 payment plan, and on some project a 40-60 as well, or 50-50. So it depends on the project. But I think a lot of my clients ask, they wonder, can we do a mortgage if you're a non-resident? What kind of mortgages do we have? Let's start with that. What are the different types of mortgages that you can have in Dubai? Fixed, variable, Islamic?
So straightforward, there's a mortgage on a ready property. That's a property with a title deed.
Yeah.
Constructed, ready to move in, title deed is there. And that's the majority of mortgages. More recently, I would say with confidence from December, possibly a little bit earlier, but I had success in December, where banks will start lending on an off-plan property. And the rule with this is the property needs to be 50% completed and 50% of the payments need to be made. So providing them two metrics are met, the bank will actually take over the remaining payments to the developer as per the statement of account. It's getting more and more common with more and more banks and developers being kind of put onto this scheme. So that's something which previously, if people couldn't afford the payment plan, they were stuck with a ready property. But now it's more and more open. The banks are certainly getting more flexible with who they lend to. Previously, it was ideally resident kind of salary clients, and then it was resident with self-employed. Now non-residents, they are able to get funding as well. Loan to values are a little bit more restricted. The maximum is like 65%. But if you want to buy a property and you have 35% as a down payment, you can do so as a non-resident.
Right. Okay. So what you're saying is that if you're a non-resident, the bank will finance up to 65% of the property value. So you have to come up with the 35% on your own. If you buy a secondary, like a ready property, or even when it's the handover of a property you purchase off plan.
Yeah, so if you try and tie the two things together, so off plan and non-resident, that becomes a little bit more trickier. It's technically not possible unless you do some other things like set up a company here. But if you're buying a property and it's handover in, say 3 or 4 years, or say 2 or 3 years, there's enough time to set up a company, become a technical resident, and then you can get a resident mortgage as a self-employed applicant on an off-plan property.
That's very interesting. I think we should go back to, we should dive into this. This is a part of the, how to preemptively prepare for your, for the handover of your property, how to prepare your finances, put them in order to kind of get there. But how about Islamic mortgages or Islamic loans? Have you done a lot of those?
Yeah, so the majority of the banks will offer an Islamic product as well as a conventional product. On paper, as in the interest rate, the monthly payment, they're pretty much identical.
Just sorry, from the beginning, like what would define?
What are the differences?
Yeah, well,
so Islamic mortgages fall under Sharia law, and
Yes.
it's against the law to charge or pay interest.
right.
So the key difference is it's kind of wording in the policy. Ultimately, you're going to be getting a set amount of money from the bank. That's going to be allowing you to buy a property. You're going to be paying back more than what you originally borrowed. But the wording for an Islamic mortgage is different to the wording of a conventional one.
I see.
This is the easiest way to kind of explain
define
it.
Yeah.
When people are so the majority of banks that offer conventional will also offer Islamic, and they're the same interest rate and the same monthly payment. There are some Islamic only banks, and a lot of clients they hear the word Islamic mortgage and they don't really know the difference. And a way I like to explain it is, if you and your next door neighbour purchased the identical property for the identical price with the identical down payment, one had a conventional mortgage, one had an Islamic one, you could both sell at the same time, you would both owe the same amount of money. There is no difference in terms of the entry and exit points, albeit the wording and the policy is different, but essentially you still have right to sell the property when you want, you still have right to live in the property, you're still purchasing it for the same price.
In the case of my property, for example, when I did the mortgage with DIB, I got a document saying that basically I am the tenant, or I'm like the lessor, I think they call it. It's the lessor of my own property. This would be the same with
This is exactly the same. Yes. So this is the wording. So rather than you're the tenant, so therefore you're paying rent. But the rent you're paying actually is the amount of money that you've originally borrowed.
Yes.
And I won't use the word interest because it's not interest.
Yes.
However, you're paying the rent as the tenant.
I see.
But again, if me and you purchase the same property, me conventional, you Islamic, your policy would say, your document would say the tenant. Mine wouldn't say that, but we could choose to sell at the exact same time, and we would owe the exact same amount of money.
And I think this is a very important point, because at the end of the day, we need to, especially in a country like Dubai, we have the opportunity to respect everyone's belief and culture. And this is very important because honestly, mortgages are such a useful tool, such an essential tool in building a portfolio of real estate investment, and it would be a shame to not be able to do that with mortgages because of belief. So it's really great that they were able to come up with something that where there's a bit of a gray area on this, and they can adapt and adjust to everyone's belief. So that's very good as well. So it's good to know that you do this as well.
No, it's when I was in the UK actually learning. So I started mortgages before regulation, and then regulation came in, and I had to pass all these exams. And there's a whole section of Islamic mortgages. And I remember looking at it thinking, I've never come across that before, and I don't expect to come across it.
Yes.
Can I skip this bit? Yeah. And here I am now.
Yes, working
primarily doing the Islamic mortgages.
Amazing.
Yeah. So it's but there's nothing. There's no limitations. There's no ultimately you're buying the property. You have right to live in the property, and you have right to sell whenever you want to whoever you want. And they're the main fundamental points. And there's no limitations between conventional or Islamic.
Understood.
It's not something to worry about.
Now let's talk a bit more about fixed, variable. What is the period fixed? What is the period variable? Like, how does all these things work from your experience? And most importantly, do you have a rough idea of the ongoing rates that we have at the moment?
So let's simplify it. Every mortgage is going to be variable at some point. A fixed rate mortgage is just basically saying for the first initial 1 year, 3 years, 5 years, 2 years, the bank will fix the rate. But after that term, you'll then revert to a variable rate.
Right.
The variable rate is always calculated on a bank margin plus, in most cases, it's the central bank EBOR rate. It's called the EIBOR rate. If you search on Google, you can see the differences. There's quite a few EBOR rates. There's a 3-month, a 6-month.
How do you say the EBOR rate?
EBOR. It's like
EBOR. Yes, EBOR. EBOR.
Yeah,
right?
it's kind of it's like the central bank kind of money lending rate.
Just like the federal funds in America. The
exactly.
Federal
the
Reserve
Bank of England base rate.
Yes.
Standard Charter have their own rate. It's called the SCBLR.
Yes.
But essentially it's a rate that is set by somebody other than the bank.
Yes.
And then you have the bank's margin. So as an example, the margin, for instance, may be 1.5% above 3-month EBOR rate. So the bank is charging you 1.5% plus the 3-month EBOR rate.
I think for the calculation of this kind of stuff, we will leave it in your competent hands.
Yeah.
And if people have some, specific, more kind of like in-depth question, we can organize a group chat and we can organize getting in touch all together. I think that can be like a...
Generally speaking, one of the questions, I've done this for many years, and I know perfect questions to ask to kind of narrow down selections. If I ask the question and say, have you got any preference as to whether you prefer fixed or variable? If you don't immediately say variable at that point, you're very likely to go on a fixed rate.
Yeah.
Because of the security, you don't want the rate increasing and decreasing. You just want to know what you're paying for a set amount of time.
Funny story. France, because I'm French, France is considered a banking paradise because for the entire duration of the loan, we have fixed rate. And usually the rates are pretty attractive as well. So when I first moved to Australia and now Dubai, I see that the banking system is based on the UK banking system, which is good for you because obviously you learned everything in UK and you can work
similar.
here.
Yeah, I was surprised when I hear, and to me really, if a bank is offering a lifetime fixed rate, it's because there's underlying issues from the past where the government have kind of stepped in and
regulated.
Said, we need to push this kind of economy effectively, because it would be great for a bank to say this is the interest we're going to charge for 25 years, and that work out best for all parties. But in reality, it's kind of up and down. So I like to look at like a long-term fixed rate. Yes, you're paying for peace of mind and security, but the banking, I don't know what the interest rate is going to be.
Yeah.
You don't know. There are people who have a slightly better idea, and they're the professionals in it, and they're the ones who set that rate. So I would like to think that they
know what they're doing.
And they work for the company who set the rate, which means if they set the rate wrong, they probably don't work there for long.
Yes.
So it swings and roundabouts. It's personally believe that over a long enough term, a variable rate would probably work out more cost effective.
Yes.
However, that doesn't mean to say that in the short term, it's going to cost you a lot more money.
Interesting.
And you can kind of see it from the people who choose a variable rate. They're usually highly educated people in finance with a lot of disposable money, and they just want to do a variable just to set it and leave it. But somebody on a fixed income buying their first home, obviously you take a fixed rate because you don't want a surprise of...
So talking about this, actually, someone who wants to buy for the first time, what would be the eligibility requirements for residents and non-residents from your experience?
So bare minimum, first questions I ask is I ask them how much down payment do they have available. Now, a lot of people will say 20%, but they know they need 20%, but I like to find out how much they've actually got, 20% of what. They obviously need the money for the kind of purchasing fees on top. So if I can get a monetary figure out of them, I can then calculate this is your maximum budget.
I see.
So if they say they've got 1 million, I can then do the calculation and say, okay, this is the maximum you can buy. If somebody says 20%, in my eyes, it's like they know they need 20%, but they don't know what 20% is off. Yeah.
In the case of a secondary property, you have 4% DLD, you have 2% agent commission, you have
it's about 7%.
Exactly, 27%.
27% is what they need. So, and then the next question is, what's what have you got in mind? Because if somebody's online looking at 3.6 million in the marina, but they've only got 500,000, there's going to be a
discrepancy.
Yeah, it's going to be very difficult to stop them looking at that and then make them look at this. So if they're kind of within their own kind of eligibility, then it's easier to continue on. As a non-resident, they need 47% because they need 42%, 35% as the down payment plus an additional 7%. Okay. But the rate at that is quite high. It's 6%.
Could you go over the eligibility requirements for residents versus non-residents?
Resident down payment is a requirement, 20% down payment, additional say 7% for fees like DLD fee,
agents commission.
all of the little bits all tied up together.
Yeah.
Slightly less than 7%, but if we
More
say
or
7,
less.
you got change.
Just to be on the safe side.
Yeah. And then the other bit is the income requirement. Obviously, they need to have some form of income to support the mortgage. Somebody with loads of savings isn't an income. It
is my understanding as well that you need to have this income in Dubai.
Yes, so
for residents.
As a lot of people will phone up and they say they're a resident, which they are, but the banking side of things is like you're only a resident if you're a resident and have income generated in Dubai.
Interesting.
So a lot of people phone up and say, I have a golden visa. It's not enough to be a resident to get a resident mortgage.
In the banking side of in the banking in the eyes of the bank, you would not be a resident unless you are having money deposited onto this local Dubai bank account every month.
And they don't mix a resident with a non-resident income. Like for instance, they also won't mix a employed husband with a self-employed wife.
Right.
It's either or. The way I kind of explain it, every now and again, it doesn't help a certain client who's got income in the UK but is a resident of Dubai. But the way I explain it is the mortgage industry is so young here and it's so busy that the banks, they have enough deals at the moment to kind of simplify things and not complicate stuff. So from a banking point of view, why would they need to review a payslip from Dubai with a bank statement from the UK or a bank statement from Germany, for instance? It's kind of like it's one or the other, and it's a lot more generous. The amount of affordability that banks will give you here, it's a hell of a lot more than at least in the UK.
Yeah.
Somebody with 5 children in Dubai, obviously has school fees, has commitments. But their income is still the same as somebody with no children. Whereas in the UK, they stringently look through bank statements and they take everything off, or Sky TV and stuff. So here it's income, 50% of that is allowed for commitments.
Right.
And then that's your mortgage payment.
And they don't really look at your outs. They more look at your ins. That's what you're saying.
Yeah, literally 100K salary, 50K is allowed for commitments. And commitments can be mortgage, personal loan, car loan, and credit card limits. 5% of the limit is classed as a commitment.
When I did my mortgage, I had to settle my car loan and my credit card.
Yeah.
But that's okay. And reduce my limit on my credit card, actually.
There's a client now that settled their loan. They had 1 year left on the loan, so they settled the loan with a new loan over 4 years, which reduced the payment, which then made it satisfactory for a mortgage. There's a lot of...
So, in terms of the pre-approval process, I mean, I have a bit of an idea of how long that takes because I went through it. But from your experience, how long does it usually take, for residents, non-residents? Does it take longer for a non-resident to get it approved? And is there a lot more things that we need to do with non-residents prior, to working towards this?
So the main issue with non-residents usually is that documents need to be translated into English.
Right.
So that in itself is going to take a couple of days, likely.
Yeah. Does it need to be certified translation or?
So initially for pre-approval, no. I can get around banks kind of policy with them, and actually I don't ask people to translate them. I'll look at them myself, I'll translate them myself online, and I'll submit on that basis. And if and only if it's acceptable, then I'll tell the client to go and translate them and get them certified. Because it's kind of from an initial standpoint, you want to try and make it as easy as possible, and you only want to really apply all of the work if the client's happy to proceed and they found somewhere.
Yeah.
Because otherwise they're just going to lose interest.
I see.
So from a timing point of view, the trick is to kind of preempt what the bank is going to want, get it from the client initially and submit it. If everything is fine, it will be submitted to the bank's credit department. It usually takes, for a resident, it can take anything from 2 to 3 days to 7 to 10 days. For a non-resident, it can be up to say 14 days. But the issue arises is if something isn't right on the initial submission, it might take 7 to 10 days for them to come back and say, this page is missing.
Yeah.
And then by the time you then get that page from the client, you might be in another month, and then in another month,
funny.
It just rolls and rolls and rolls.
It's funny you should say that. Actually, I gave a check to one of my friends for like about 5,000 dirhams, and. Anyways, and so the bank saw that and they thought this was like a mortgage payment, or this was like a something payment. So they asked me to get the bank statement from my friend, because I had done some. We got to be careful who you give a check to.
It's like they ask you a small question, you provide the answer, they review the answer, and then they ask you another question based on the answer.
So to be on the safe side, before you have to get your mortgage, how long do you think we need to get that done?
So for me, me being a mortgage advisor, you would like to think that my mortgage would be the easiest possible process ever. I wouldn't look at a property until I've got a pre-approval. You can't really.
But I mean, in the case of someone who's a resident who's bought off plan and who is waiting for the handover to do the mortgage. Okay. So how long do they need to start, looking into this?
I would say if you phoned up before 3 months, I would probably kind of say to call back. But at the 3-month point of it being handed over, that's the time when you should start. Yeah. It may all happen within 2 weeks, but if it does happen within 2 weeks, it's not going to say you're incredibly lucky, but it's better to have it waiting there for 2.5 months than to wait 2 months before handover. 2 weeks before handover, and then have this issue with the check, or an issue with a page missing, or the person who gives you the salary certificate is away on leave. It's Dubai. Like every corner there is a potential delay of something you could not foresee. You cannot foresee. It's so random. It's just absolutely ridiculous.
That's actually very true.
The best piece of advice to sum it all up is do as much as you can do as soon as you can do it. Yeah. Like you don't have any control over when that building will be handed over, but you do have control over when you apply for the mortgage.
And so I think an important part of this question is, this is for the pre-approval part, but in the case scenario that I have a lot of clients who want to do, like a visa, golden visa, this kind of things. And I tell them, you can do a mortgage, but you do need to show that there has been some transaction on your bank account, that you have been making this bank account, receiving incomes, receiving different incomes or different source of income in Dubai, in this bank account. So would you say that's something we need to take into consideration?
Like a lot of people are worried about their credit history and transactions and things, but really speaking, the bank is looking to tick boxes. If you present a bank statement with literally salary going in and then a monthly credit card payment going out and no other transactions, they're not worried about that. They just want to know, do they earn enough money? Is their company on the list, or is it blacklisted? Have you been at the company for 3 months, which is their policy, or 6 months, which is their policy?
3 to 6 months, yeah.
It's like the way we kind of work it is I speak to a client, I'll ask them all the questions I need. Based on all of them answers, I'll say, look, these are the banks that will accept. Out of these banks, this is the most cost effective, this is the lowest rate, this is the one with the lowest initial payment with fees and things. You'll be accepted for them all. And it's extremely rare that an application goes in and it gets declined. Not many people in Dubai have got bad credit. It's not like home country. That's
very interesting point, actually, what you just said.
It's not
so
like...
you would say that by definition, comparing with European countries like Europe, like UK, for example, getting a mortgage in Dubai is rather easy.
It's extremely easy. It's the rules, they're complicated, but if you know somebody who knows the rules and you submit to the correct bank, then there's absolutely zero reason why the bank isn't going to give you a mortgage. There's an instance, a client worked for a school. We applied to I won't mention the school, but we applied to a specific bank, and the bank wouldn't give the client the money because the school had defaulted on a loan. The company the client worked for had a loan with the bank, and because they defaulted, they kind of blacklisted the company.
Oh, I see.
So that's a bizarre reason.
Yeah.
That's an absolutely bizarre reason. What did we do in that case? Switch it to a different bank. It goes through fine.
And it went through fine.
Yeah, but there's unless there's some weird, bizarre reason like that, there isn't really any reason why a mortgage should be getting declined.
Even if you don't have necessarily a credit history in Dubai.
Yeah, it's not. You can be. I did a mortgage for somebody who. It was last May actually. He started work on the 1st of May. He applied he phoned me middle of May. Told him to get his documents together. We applied in June. He didn't have a bank account. His visa application was going through, and it went through with. Well, he got offers from HSBC and from RAC, and
really?
It was like a 7.6 million. Don't get me wrong, he had a good job, and there was a requirement that because he was new to the country, he could only go with certain banks, which didn't say 3 months salary. He actually ended up going with. He actually went with HSBC originally because they were moving quicker, but HSBC downvalued the property, and by the time all of this kind of come to fruition, he'd been at the company for 3 months, which he could then go with RAC Bank. RAC Bank revalued the property, valued it correctly, and now he's with RAC.
Right.
So, it's you just have to face whatever issues come up.
Yeah, which is why it's so important to have, someone who's really able to guide you through the many steps. Because actually, that leads me to my next question. What are the generally speaking, what are common mistakes or red flags that you should be on the lookout for when applying for mortgages, when talking to another mortgage broker, for example, or these kind of things?
So a lot of people I speak to, they'll go to their bank. The majority of people here bank with EMBD, and they'll go to EMBD, and EMBD will tell them, you can't get a mortgage because of this reason or this reason or this reason. Your company isn't listed. You don't earn enough. And they just think that is across the board. But then they come to a mortgage broker who isn't tied to any bank, who doesn't say you can't get a mortgage because of this. It's like, okay, you can get these mortgages, or you can wait for this amount of time and you can get these mortgages.
That's so interesting. I have a friend who had the exact same situation. The bank, ENBD, asked her to stay 1 year in her company.
Yeah.
And then when she did I introduced her to a mortgage broker, and she was able to get it done nonetheless. Even though it was
that is kind of the biggest. The biggest misconception of it is they go to their bank, they expect it all to be the same, but what they have to realise is, and it's hard sometimes when people phone up and say, what's the best rate, what's this, what's that? Now, if I worked for EMBD, I could tell you what the best rate with EMBD is, but I can't tell you what the best rate is because the best rate is dependent on your circumstances of what banks are available.
Yes.
So therefore, it's not that I don't want to tell you, it's like I need to find out your information to then come back and give you the best option.
It sounds a little bit like the real estate, based on, it's not what is the best price, it's what is the best product. It depends on everyone's requirements, budget, where do you want to work, where do you want to live, where the kids are going to school. You gotta, it's like a whole scope of things. Exactly. Okay, I think that's very clear.
I'd also as well on that say, I speak to a lot of people and they say, my rent's not up until February. So they phone now, they discuss it now, they get the quotes, and then they say, we're not in a rush. And I kind of I turn into old version of salesperson, pushy, but then also think I'm not that guy. So I kind of politely say, look, there's no reason why you don't start this process now. I know your rent is up in February, but it would be amazing if you could apply for a mortgage in January, get the mortgage in February, find a property that's vacant that you can move into.
And I'll tell you something as well. Usually this process is supposed to be very smooth and easy. And I had some issues with the contract, the initial sale contract. There was my name not written properly. We had to get involved with the DLD, the Dubai Land Department, to get it rectified. It was a bit complicated. So as you said, we're in Dubai, and at every corner, at every step of the way, there might be a problem that you never foresaw that just
you can't.
Just happened to be here.
I started working with a guy I never met. We ended up renting an apartment together for like 2.5 years.
Yeah.
He does mortgages now in a real estate company. I do it now from this side. And we sit there every now and again and kind of talk about the last 3 years. And we discuss each other's blockers of cases. and we literally amaze each other by just some of the things that crop up.
I'm sure I would, you know what, I would love to join one of those, those parties.
An example is like an 8-year-old owns a property. Somebody's bought it obviously in their daughter's name, but an 8-year-old can't sell a property. And we only found this out later on down the line. So the check needs to be given to the parent, but the bank will not issue a check any different to the title deed. And it's kind of like, and then you may think like, oh, this is fine, but it's kind of not fine, because by the time you get to this stage, you're running out of days on the sales contract, and the NOC has been issued, which is running out of days, and the valuation is running out of days, and
of course, exactly, that's
all of these little departments, like they don't care. It's like, we valued it at this time, it's valid for 60 days. The sales contract is valid for X amount of days. It's just, there's a lot of spinning plates.
Exactly. That's funny. It's like exactly what you said. Once you get the first pre-approval and you get the valuation done, you're kind of like on a race against time itself, because all of these things run out of, they have a expiry date, and then you end up like having this document expired, then you got to do it again, and this and this and that.
What I've learned to do, so I typically give a client, say, 3 different options. I'll always give them the lowest rate, because if I don't quote the lowest rate, somebody else will. The lowest rate isn't always the best, and in most cases it's not, but I still quote it and I'll still explain it. And then there'll be another one with like a salary transfer, and then one without. And I kind of give them these 3 different options, which are all different. There's the lowest rate, there's a salary transfer, and there's one without a salary transfer. And then whichever one the client then kind of chooses through more kind of talking to them, I will then go back to them and say, okay, I'm going to submit it to this one, but also this bank is offering a very close option to that one, and I'm going to submit it to that one as well as a backup. And then they're like, well, why are we doing this? Why do we need a backup? And I've learned that it's much better to start 2 options, submit all the same documents to them, fill in 2 application forms, get 2 signatures. One of them is going to outperform the other. Now, if they haven't found a property, obviously they can wait for the preferred option. But if they find a property tomorrow and the seller is leaving for home country for 6 months and needs to complete, and it's a really good deal, they may not be able to go with the preferred option because that bank is overly busy, so they may have to go for the second option. And then likewise with the down valuation. Does that client now want to start the whole process again, send in, get a new salary certificate, do all that stuff again, or do they just rely on the backup option, which I recommended at the start? And it's, for the sake of an hour filling in another form, it can save a hell of a lot of issues later.
Can you expand a little bit on this down valuation, actually? So what are the, because this is the red flag and mistakes that you need to avoid, right? So basically a down valuation is when the bank says that the property is worth less than what the actual selling price is. Is that right?
Exactly that, yeah. So the valuers are they're pretty rigid in how they value stuff. It's not really an opinion. It's more of a price per square foot of recently sold properties.
Right.
The issues can sometimes come when you've got bespoke properties, which you can't find a similar property. So
on the luxury market segment, this can be something that is hard to justify for the bank when you're asking for a very high price.
Kind of, yes. And also, like the top floor apartment, the penthouse apartment, for instance, because the valuers just look at data and they'll apply a little bit to the view, but something with a sea view is obviously better than a city view.
I see.
It's very rare that it comes up, but when it does come up, it can cause a problem. For instance, the bank is only ever going to lend like the maximum loan to value based on the valuation or the purchase price, whichever is lower. So if there's a shortfall of say 200,000, that's an additional 200,000 that the buyer needs to find.
I see.
There is, the agent can put certain terms in the sales agreement to cover this, and that term can work both ways. So if it gets overvalued, then the seller can renegotiate. If it gets downvalued, then the buyer can renegotiate.
Understood.
But that depends on the contract between.
Would that be a scenario that can be problematic in an off-plan transaction for the mortgage?
Um,
Because usually the
not
developers
really.
set the price, so there's
Yeah.
not going to be a valuation
No,
unless
yeah.
you request it.
No, there will be a valuation, but also from an off-plan point of view, especially since I've been here, the price that you buy at is going to increase by the time it's completed, because it's obviously it's worth more anyway.
Right.
So I've never ever seen a problem with an off-plan. But yeah, I suppose if we go back to say I don't know 2008 time,
Yes,
then
yeah.
completely different. But
Of course.
essentially the bank is going to value the property, and the bank is only permitted by the government to lend 80% as a maximum.
Yeah.
So it needs to be within that bracket. I've never
80%.
ever seen an off plan. I don't think it wouldn't make any sense if that was to happen anyway.
So that's very great. Now, and very interesting. I think we talked about a variable rate. We talked about fixed rates. Now, for me, for example, I don't know, but a lot of people don't feel comfortable with variable rates, or sometimes when you're on you've bought your property and you've had it for 1 year, and then the rates suddenly drop down. So what can you do if you have a fixed rate? So you can do there's the refinancing. The refinancing is a tool and is something that is a good strategy. So can you define a little bit refinancing? Can you explain?
Yes. So at any point in your mortgage, be it month 1 or year 24 or however long you take it, you're free to switch that mortgage to another provider.
Right.
So you can switch it to a new provider because if you want to change the interest rate. You can switch to a new provider if you want to change the term. If you took it over 15 years, but now you want over 25, change it to a new provider.
Or change your banker.
Yeah, or change the bank. Some people fall out with the bank and they just want to switch. What is more common is in the UK, it's called remortgage, equity release. It's refinance. It's a way of basically taking money out of the property. And you may want to do that because the property's increased in value.
I think it's very important to define here clearly. So there's the refinancing part of things, and then there's the equity release, which is a difference. It is my understanding that in Dubai...
Essentially, it's all the same.
Okay.
Essentially, you're changing the original term of the mortgage, so you're refinancing.
Right. Okay.
Now, whether you refinance for the same amount with a different bank, or you refinance for a higher amount with a different bank,
right.
or you even refinance with the same bank for a higher amount.
And then in this case, this is what we call the equity release.
Yeah.
Have you done a lot of these?
Yeah. So it's essentially if you at any point in time you're paying money off your mortgage. If the value stays the same, you still owe less than what you did last month. So you have more equity in the property. What generally happens is the property increases in value. So if you borrowed 80% on year 1, let's say in year 3, you now have 70% owed against the new value. So you've effectively got an additional 10% equity in there. Now, you can take equity release. You can take that from the same bank as a top-up of the mortgage, or you can refinance to a different bank, but you just ask the different bank for a higher amount. They will then use the higher amount to pay off the current mortgage, and then you'll have this equity left over. And there are rules around what you can use that for. I think we chatted the other day, and the way I summed it up was...
You said the bank feels more comfortable giving this money directly towards a project or a property. So, for example, and I think this is a very important point here for viewers, because that's something I talk a lot about, especially during a client's meeting. If you have equity built up on your property and you want to do what we call the equity release, the bank will feel more comfortable giving this money directly to the developer for a second property purchase once you release that equity.
It's to sum it up, I would say it's known as a control payment, and it's basically a payment that they don't want to put it into your bank. They would prefer you to give it to a builder for renovations to a property, or they would prefer you to give it to a developer for the purchase of a new property, or a reseller for the purchase of a ready property.
So in the end, it's very interesting because when you really dive into all the ins and outs of the real estate market, there is so much more that can be done. With a good finance, if you buy the property new, off plan, old, there are so many things that can be done with the equity release. After you've held the property for 3 years, you can then do a refinancing or an equity release.
You can do it straight away.
And then you can get your renovation paid for, and then you resell it. And so this, like it really is very fascinating and very interesting. And I think that's why it's so important to have someone who can give good advice, especially personalized, based on what you want. What is your timeline?
Yeah.
I think people invested in the real estate market in Dubai with a very short-term speculative kind of like strategy. But now this is shifting, right? We're seeing more and more mortgages for.
There's more mortgages for, and there's a shortage of villas. There's more end users coming to Dubai.
Yeah.
Previously it was apartments and people were renting them. Now people actually want to live here themselves. And yeah, it's definitely growing. You've only got to just drive anywhere and count the cranes. It's definitely growing. Yeah. The equity side of it, again, this is one of these questions where people phone up and they just want an answer, and they're given 5 or 6 questions. It's like, I can't give you an answer. I need to know how much do you need? What do you want to use it for? Or how much can I get?
So you're not a salesman. You're just trying to help.
Yeah. It's kind of like you go into EMBD again. EMBD will be like, we can't release equity into your bank.
Yeah.
But if you phone me up and say, want to release equity, what do you want it for? What's this?
Yes.
And essentially, to sum it up, you can get maximum 80% if it's a controlled payment, and that's to developer or builder, or maximum 30% if you want it into your bank.
What you just said is very important. So what you just said is that the bank will release up to 80% of the equity built up on the property.
80% of the current value of the property.
Yes.
So if the value is now 1 million, they will release up to 800,000. But if you already owe 500,000 on another mortgage, 500,000 of that 800,000 would be needed to pay that mortgage off.
Right.
So now you're left with a new mortgage of 800. The old mortgage has been paid off, and then there's this equity release of 300,000.
Right.
All of these terms, in my eyes, they're all the same.
Yes.
But when a bank comes out and they spend money on marketing, they want to create a new buzzword, and it sounds good, and it's this and it's that. But essentially, you're basically asking a bank for a mortgage on a property, which now happens to be worth more, and you want some of the money out. So
I see.
Same, all the same in my eyes. It's just complicated with
tomato.
Exactly that.
Yeah. Yes. All right, Kevin. Well, thank you so much for joining us today.
No worries.
Honestly, that was very informative. You will have we will put your contact details on the description of the video. We'll also do some short reels for social media. Feel free to reach out directly to Kevin or to myself if you want to find out more about off-plan properties. If you want to find out more about mortgages or secondary market, we can probably work something out as well there. Again, thanks, Kevin, and I hope you
had a
good time.
Thank you.
See you next time, and thanks for watching.